Hey everyone, welcome to another weekly review. This week was more of a consolidation one. We closed slightly red on it for the week. And um, how I would describe the current situation is limited upside potential, large downside potential. Because of multiple things, let's count them one at a time. First of all, moving averages. We are very close to the combo of the 100 moving average and 200 moving average. 100 is purple and 200 is orange. uh, 50 is blue and 20 is green. So we are very close to this, and we got rejected once before, huge bear market rally, and we are about here. And the potential for rejection is very high. Historically, when we go into a bear market, this is kind of how it behaves. Uh, first attempt, oh sorry, first recovery, then it becomes resistance, maybe some overshoots, obviously, the first couple of times. We went below, it became to resistance, we dumped. Then another bear market rally, exactly at the 200 MA we stopped. And then the final ones, another rejection in which we made a higher low and eventually we turned above it. In 2018, we stayed below it. We had a couple of overshoots, but eventually we made new lows. In 2015, again, a couple of overshoots above, and then we made new lows. We got eventually rejected. And in 2007 and 8, the top was October 2007. First couple of times we got rejected after slight overshoots. Then it became resistance, and finally the crash followed. So from this perspective, we are now at what I would call the equivalent of either this or this, depending on where we are in the cycle, and we don't know yet. But the chances that we get rejected are very, very high. And next week we have the CPI print as well. We saw some concerning data about used car prices, which has in the previous cycle uh, caused a spike in CPI or fed into CPI increasing. And what I said earlier is also how I see the potential for the market to react to CPI. So a very cold CPI, the market will maybe react bullishly, but not over enthusiastically, because it will still fear the potential CPI impact from tariffs. So even if you get a cold print, the market will be very reserved in a move up. Like I said, maybe we still move up to like this 580 area. But if we get a hot CPI print, all the market fears will become reality, and we probably dump horribly from here. And the chances are we get a hot CPI print at this time. So don't be very bullish going to this. So limited upside potential for downside is pretty huge. Then VIX. We have another VVIX ghost print. I posted about this one together with the one from the yields, but we have another one here at 144.91. And my expectation of VIX is still either twofold. So basically, we are in the area where after a large VIX spike, we find support and we should see a multi-day rally, in my opinion, either to 30 or to 42.5. So we are in this area, maybe some sideways until CPI, and then either a spike, and that spike to this area, and then we go down, potentially retest this trend line. We go even lower next time, and eventually a move to 42.5, or we move directly to 42.5 this time, and obviously this scenario will make us drop faster and lower. So these are the two scenarios I think. These VVIX ghost prints are reinforcing my view. I think this is due within by June OPEX. Uh, on the short time frame, I don't know exactly. Then we also had this week the ghost print in the 2 year. It's now been corrected in the chart, but I marked it down and it happened here. Still 10% upside and a potential breakout from the Iron Dome for now. we have an RSI breakout in progress. Usually an RSI breakout is a precursor of a price breakout, so also not confirmation, hinting towards a move up in the 2-year yields. But for the example, the 7-year, this is still there. And while we had a 10% ghost print in the 2-year, for the 7-year, it's only 3.74%, which is consistent with a reinversion of the yield curve, meaning the twos go to the same level as the 10-year. And this is the expectation that inflation will go higher in the short term. For the 20-year, this is the ghost print. We are basically already there. And again, it shows that there will be an inversion in the yield curve because long-term yields cannot go higher. They're already super high and restrictive. It's only the short-term yields that can spike and affect this. And the market is a lot more sensitive to spikes in the 2-year than in the 20-year. So this should be consistent with equities dumping. So that's kind of the whole setup, the whole setup here. As to how low and how brutal, I think the final target is 500. I don't see us going below 500. But depending on which scenario we get, meaning lower, back higher, back high, and then lower again, or lower directly, we get. And that will depend on maybe the headlines about the US-China deal, how hot is the CPI if we get a hot CPI, and so on. So nothing is certain right now. We'll see how the setup plays out. But I remind you that we still have potential to go slightly higher depending on what happens next week with these two events. And this is slightly bullish, like we had here. We broke out, we went higher. We have kind of the same setup here. If we move higher, we could go as high as 580 and retest this higher here, slight overage of the 200 MA, and that's kind of it. But once that plays out, my scenario is one leg at a time. Let's assume we get the bullish version before that, then I'll redraw this for argument's sake. I would assume we go to, oh sorry, not this one. I would assume we go first support here, second support here, and this would be the target for the scenario in which VIX spikes to 30 and then goes down again. So basically this would happen. We get the AVU up. Oh no, sorry, yeah, we get this here. This is the top of the God candle. This is the AVU up from the low. We go to the AVU up from the low, then we go higher, maybe make a lower high somewhere around here. We'll see. And then we should get that move to the 500 area into June OPEX. This is not time accurate the way I drew it. Or if things are really bad, we could go to 500 directly here. And I think this is a buy if we go here. Looking at positioning on the quarterly, or let's look at all. So this is SPY, and we have 500 as the biggest level. The whole curve has shifted to the right because the market is now a lot better hedged than it was when we initially dropped, and I don't see us going below 500 in SPY. Same here for SPX, like 5K is a huge level. For QQQ, it's 450, but it's a bit more complicated. I think we can go below 450, but again, not significantly, maybe 440. And for IWM, like this 170, 180 area should be where we stop. 170, yeah, somewhere around this area is where we should be stopping based on positioning. And another reason why I think I look at names like AMD, and they've been beaten to death. Some mild up in earnings, but when I look at it, I'm thinking something like every time it has not bottomed, it makes new lows. Uh, when it fails to make new lows, that's when the bottom is in basically. And for example, here went sideways for a while, made new lows eventually. went up a bit, but still made new lows. Went up again, still made new lows. And eventually, when it failed to make new lows, it started going up on a bull cycle. And I think we are very close to that moment here. Like I could see it retesting the low area, but on the market going down, but I don't see it making new lows at this point. So I think we will either be making higher low, maybe something slightly, not significantly, or a low retest and potentially for a new leg down. And it's true for stuff like NFO, like it's new lows, and it seems to me like it's getting fatigued, and we will get eventually a, a bottoming out that gives us a more sustained bull phase moving forward. Stuff like Nike, which I posted today, again, it's been dumping, but it's so oversold that it seems almost impossible for it to go lower without going higher first. Like I don't expect this to be a super huge bull run, but making a new range here, like going in this area a couple of times is plausible. So not really like a bull market, but more of a short-term bottom. We go up, then maybe we go down with a next leg down of the market, then we go up again with another bull bear market rally, and eventually we start this range is developed, and eventually once the bear market ends, we have a breakout and it moves higher from this this accumulation range, let's call it. So this is kind of how I see all of them, all of these names, and these are just examples of charts that give me this vibe. For AMD, it could be maybe we still go higher, we have a breakout, we go to the AVU up, and the range becomes something like this. Eventually, this. But this is kind of the vibe I'm getting. So it's not, I'm not seeing the market being uh, that bearish aside from the potential to retest that 500 area. And we didn't get breakaway momentum and we didn't get the Wally breath first this time. But imagine that we go, we actually, let's say we get the super bearish scenario in which next week we start on the move to high 500 and we actually play it out very quickly, like by end of month we are at 500, and then the the cycle turns again, we go to 500 and we bounce. The bounce is going to be just as violent as the move down. So I'll draw it on US 500 because it's a less busy chart. So we go here, then we go down, and by early June we bottom at 500. Then the move up will be just as fast. I think by, let's say we bottom around here in this week. Then we have 3 weeks until OPEX. And I would expect the market will make a full recovery back to the 200 MA, which would be slightly lower, so around this around where we are now by June OPEX. And I think we will get confirmation from the breadth thrust that this will be a long-term bullish move. So we didn't get breakaway momentum and we didn't get Wally. We got Zweig breadth thrust around here. So I think we will get it again probably around here, and we will get also breakaway momentum and Wally breadth thrust. We will get all three breadth thrusts in the second move up back to the 200 MA. And of course, it doesn't mean it's it will go up continuously, but I would expect that we overshoot the 200 MA, we go back below it, we make a higher low, like it, sorry, something like this. And eventually we break out and then that's all she wrote. We go significantly higher from there. So this is how kind of I see things playing out in the short term. I'm not overly bearish, but I think there's a lot of potential for uh, a significant downside move based on the economic data and the headline data with tariffs coming in the next couple of weeks. Remember that we still have to hear about pharmaceutical tariffs, we still have to hear about semi tariffs. So If the CPI is hot, and then we get other news that is negative, there's potential for a lot of downside to feed on itself and push us lower and lower. Aside from this, the good news, quote unquote good news, is not really that good. The UK deal is bullshit. I expect any other deal to also be bullshit, and the market will catch on relatively quickly and fade it as fuck. So this administration actually has to do a real turn, not this bullshit narrative that is trying to push that the market is for now accepting, but it won't accept them forever. So that's it for this week. Have a good one. Bye bye.